Good afternoon, everybody, and welcome to this edition of Think Technical for Thursday, 27th of May. My name is Carl Cappellingua, and I'm the market analyst over here at Think Markets Australia, and it is a pleasure to be catching up with you today as we discuss everything technical, everything chart-related, all the biggest movers on the markets right now. We'll do that after we talk about the Think Markets difference, which is substantial, $8 flat rate trades, your own holder identification number, unlimited phone support, and of course no hidden platform or subscription fees. 4 fantastic reasons to make sure your next ASX share trade is with Think Markets. And if you are new to the Think Markets family, and join us, get trading before June 30, your first 5 trades are on us. Hey, we don't just trade Australian shares. We do offer cryptos, indices, foreign exchange, overseas shares, and more. So definitely get to Think Markets website, download the Think Trader app, and get trading with us. The agenda for today is to have a look at the big picture first, and then we're going to drill it down to some individual stocks, a large lap around the block, including crypto and indices as well. It's going to be brief though. There won't be huge explanations, fundamental explanations to back things up. It's going to be just a quick look at each chart and then a move on because there are so many to get through. First up, Australian 10-year bonds. We know very recently bond yields have risen sharply, and that undermined the confidence in the share market. We've seen bond yields just sort of flutter back down to the bottom end of that recent consolidation zone. They've been in between about 2% and 1.6%, and that is supporting higher equities prices. So that's pretty comforting for stock investors, I would say. And looking at the US version of things, they have been a little bit more robust in terms of their yields slash weaker bond prices. Of course, bond prices tend to be weak when interest rates are expected to rise, and there's not a lot to worry about in the global economy. But the important thing to glean from this particular chart is that whilst we're stuck in the middle, that is a good thing for stocks. If yields burst through the top of that zone, typically stock markets don't like a sharp rise or an uncertain end to the rise in yields, so that would be bad for stocks. And if yields break through the bottom of that range, it would be because, remember, yields are inverse to bond prices. Bond prices are rallying, bonds are rallying because it's a flight to safety. There's something wrong with the global economy. We don't want that either. So whilst we're stuck in the middle, that's the best case scenario. So I think what we're seeing on screen, both in terms of the Australian and US yields, are supportive of higher stock prices going forward. I'm just in a particular database over here, but where I get particular prices. So let's stick with it for the time being, and then we'll shift to a different database and have a look at some other big macro factors. First up, crude oil prices. I think they look very strong. Short-term trend is up, long-term trend is up. The price action is fairly supportive of higher prices. We are seeing a little bit of a lower trough sort of pattern in here, which isn't ideal. We'd like to see rising troughs, but I don't think there's anything too sinister in there just yet to suggest that the short-term uptrend can't continue, and certainly the long-term uptrend is very much intact. So I remain quite positive towards the crude oil price. We've got a few other commodities here. While we're in this database, we'll have a look at the gold price. So this is the COMEX continuous front month contract, supported also by the short-term uptrend. Long-term uptrend is in play. There are some nice candles through here. We've been talking about a potential gold rally. I think in our last Think Technical, it would have been late last month. Look, the price has continued to rise since then. We've got some nice price action, higher peaks and higher troughs. The candles are predominantly white. I think that's very supportive. The only thing I would warn against in terms of gold bugs getting too carried away here is that the ground we've covered and the pace of this rally has been a little bit anemic compared to the decline that we've had. Hey, a gain is a gain, but to get really excited about this, I'd like to see a bit more aggressiveness in terms of this rally. So look, I would. It's only a very, very minor word of caution there, but otherwise happy to back the trends on this. And we will have a look at a few gold stocks which look interesting a little bit later on in the presentation. We've got iron ore prices which have plummeted over the last few weeks. China has been taking steps there to reduce speculation and froth in this market. It's one of the markets they've targeted, and we have seen prices come down. They have come down to the long-term uptrend zone. So whilst that holds, I think there's still plenty of ability for this to bounce off here. In fact, look at yesterday's session. In fact, if you look at the current session, it's starting to bounce quite nicely off that level. We'd need to see a high close to confirm that. So that is somewhat prospective, but hey, I do think a lot of damage has been done here, as evidenced in that short-term trend the severity of that downtrend. To flip this around, that's the sort of rally I would have liked to have seen in gold. That sort of really sharp move, and we haven't seen that. But obviously, a sharp move to the downside is not ideal, and we're going to talk about sharp moves to the downside when we get to the crypto discussion. The move here, and I know it's a bunch of dots there, but it's simply because we've got afternoon fixes here on the Singapore price. We've seen a similar decline in not the spot month contracts. They're still hovering above 200, but as you go next month and out, we have seen a similar decline. But the message there is long-term uptrends, that is, are still intact. Short-term uptrends are under significant pressure. I think that's it for the commodities here. Whilst I'm in this database, let's have a quick look at the couple of stocks I've got here to look at. They're in the news at the moment, so I thought we'll take a quick look at them, and that's AMC Entertainment and GameStop. I don't follow them that closely, but I read an article saying the short squeeze is back on. So I did have a look at the chart and I thought, wowzers, okay, I probably should have kept an eye on this one, because it did certainly look like a very steady consolidation phase and building phase through here, and in volume was actually quite interesting too. Look, by a freak chance, if you had it, I would actually hang on to this one. There's nothing in that last couple of candles, or the volume to suggest that it can't keep going. I'd be wary if I started to see some big black candles come in and some upper shadows. But crazy as it sounds, I'd hang on to that one. And the other one is GameStop here, which looks like it's actually more along the lines of just getting started. So if you're prepared to take a very, very, very small bet in terms of your broader portfolio, look, they don't look half bad at these levels. So if you were wondering what was going on in that space, now you know. If you've been wondering what's been going on in the crypto space, let's have a look at the total market cap of all cryptocurrencies. Since our last update, which was a little while ago now, back at the end of April, we have seen a combination of bearish factors hit this market. I'm sure you can Google what they are, but we're here to focus on the technicals, and significant damage has been done to both the short-term and long-term uptrends. In fact, the short-term trend here is now fairly ensconced to the downside. Long-term trends are being challenged, as we can see by the interaction with this long-term uptrend zone. Now, this zone should be acting as a dynamic because it's moving, area of support where prices tend to bounce off, and that's exactly what we're seeing. We did see somewhat of a double bottom pattern in here. Lower shadows indicate there was some demand meeting the market. Some white candles to support is pretty impressive. This is a live candle here, so take no notice of that. We won't know what the supply and demand dynamics are until that candle closes. But on the basis of the previous candle, we probably have set a short-term low for the time being. Now, to stave off a 4-year winter of discontent, which is typically what happens with Bitcoin, these multi-year highs it makes, and then disappointment for a number of years, we need to get back up very quickly. And I would suggest that we need to be sort of around the 2 trillions here in terms of market capitalization. The big ones would have to make the big push. So a little bit concerned about A, the amount of damage that has been done, and B, the lack of rally up to this point. But there's still hope there for the hodlers. Let's have a look at some of the individuals. In fact, let's look at the Bitcoin market dominance before we get to those individuals. And we can see that Bitcoin market dominance has been steadily falling through that bull phase. There was a bit of a flight to quote-unquote safety or quality in terms of moving back to the biggest one there, Bitcoin, in that correction. And since the bounce started, we have seen a move back into some of those alternative coins. Ethereum is probably the big one. Let's have a look at the Bitcoin chart now. Zoom in just a touch there. We can see that, again, significant damage has been done to the short-term uptrend, which has now turned into a downtrend. We know it's a downtrend because our moving averages are heading down. We've got significantly bearish price action in candles, and we're trading beneath that short-term trend zone. It's concerning for me that we didn't see enough support here at the long-term dynamic support zone. It did try and bounce just that one day. But again, the combination of factors, Musk tweets, moves in China to increase regulations on cryptocurrency, and just a bunch of stops being hit and forced liquidation, slicing through that long-term uptrend zone. I don't like to see that. And even worse, I don't like to see it when we slice through such a key area of what should have been support and then hover beneath it. It tells me that that support is potentially acting as resistance, and I'm quite concerned here. On the positive side, this shadow down here on this low at 29,641, which reached into what should have been a support level there at 28,876, which did hold. That's encouraging. And another shadow here. They're encouraging signs. This candle here, somewhat encouraging. Would have liked to have finished close to the high, but we've seen a dribble higher. We're not going to look at that last candle. It's a live candle. This upper shadow into the zone is concerning. Let's get to the point. We are still in a supply side market, regardless of what happens over the next even days or weeks. I think we're still supply side for Bitcoin. I can't get excited about it at this stage. For me, looking at this chart, and based upon my significant experience in looking at charts for over 2 decades, I have to feel that the path of least resistance is still lower on this one. So is the train wreck limited to the big one, Bitcoin, or does it extend across the rest of the cryptocurrency class? It doesn't look great, let me tell you. Significant damage has been done. I'm a broken record, I keep saying that. Significant damage has been done to these trends. If we are in these long-term sustainable trends, we shouldn't have seen the amount of supply and also just the complete lack of demand in the face of that supply that we've seen over the last couple of weeks. There are some encouraging signs. Ethereum is bouncing off some key support levels, really where this breakout began, around that sort of 1,800, 2,000 zone. Notice how much bigger the bounce is here straight away in Ethereum compared to Bitcoin. That's also encouraging, certainly in a relative sense, but potentially this short-term trend zone, which used to be support. It was very supportive, now acting as resistance. Another bonus is we did hold the long-term trend zone. Unlike Bitcoin, we sliced through it. So there are more encouraging signs on Ethereum, but would I rush out and buy it right now? I don't think so. I just don't think there's enough in it to suggest that we are going to get this massive V-shaped recovery. I hope I'm wrong, because I know a lot of people watching this are probably long Ethereum. The more likely scenario perhaps is another pullback and another test of this zone, and maybe with a long lower shadow and a follow through, that's where you're going to have a higher probability entry. But I don't think there's any rush at this stage. Let's have a look at some of the other big ones out there. The third biggest of the non-stable coins at the moment is Cardano. This one also held its long-term trend zone. That's really impressive. In fact, it's holding its short-term trend zone. I'm pretty sure the only one we're going to see in this list today that's done that. So on a relative basis, this for me is the strongest one out there. It has exhibited all the traits of the bounce from the last two, so the lower shadows reaching into significant support, white candles, more significant white candles potentially in Bitcoin, maybe not as much as Ethereum. But the fact it's holding the short-term uptrend zone makes me feel more confident in the prospects for Cardano than Ethereum and Bitcoin. Looking down the list, Dogecoin is now, I think, number 4 or 5, and this list changes all the time, so forgive me if I've misspoken there. This one has held its long-term uptrend zone. It's now consolidating, I think, quite fair to say, consolidating beneath its short-term dynamic trend zone. That means this zone has gone from acting as support into resistance. The bounce is not terrible because we do have those lower shadows. We do have a nice demand side candle here, but the last few quite indecisive. The demand's not really following through. And really, for all of these charts here, these crypto charts, you need gains to get more gains. You need the gains in the system to trigger that fear of missing out that drives this market. And unless we can get back, and this goes for all of them, unless we can get back up above some key resistance levels very quickly, I'm quite concerned that this could be a more protracted move back towards the recent lows. I know I'm jumping around here, but I guess such is the nature of the beast at the moment. I'll give you a number on where I'd like to see these close above, really in the next couple of days, really probably by Monday. Otherwise, I'm quite concerned. So I'd like to see Bitcoin closing above 42,000. Certainly by the weekend. I'd like to see Ethereum closing above, well, this one doesn't have to do as much. Look, I'd like to see it close above 3,000, I think, by the weekend. That would be very positive. Cardano, probably 180, I think, would be sufficient. So you can see there's less work that needs to be done by Cardano and Ethereum than Bitcoin. Dogecoin, I think this one, it absolutely needs to get certainly above this high here and I'll tell you what that is about. Let's call it 42 to just re-spark that one. And maybe we'll do one more while we're here. Let's talk about Polkadot. And this is one of the worst performers. So honestly, this is one of the better stories I feel that are out there, but the market's not agreeing with me right now. It has had a terrible time. We can see a bit like Bitcoin, it's sliced through that zone. It's certainly to the bottom end of that long-term zone, I should say. Short-term trend clearly down, and a lack of a bounce, I think, compared to the other ones. Look, this would need to be printing 32 really to get its mojo back, and that is a long, long way from where we are. I might just finish off with MATIC, which is for me probably one of the stronger cryptos out there. It's much smaller than the ones we've talked about, but in terms of relative strength, certainly by far and away the best, and the chart there should pretty much explain itself. Would I chase and buy it up here? No, I think it's had a pretty good bounce, maybe into some pullbacks into that light green zone there, around about that 155, 160, with some price action might be a better way to go. And I know I keep saying one last one, but let's do this one. Shiba Inu, which was the Dogecoin, not spin-off, but conceptually in terms of coming up with a stupid idea and putting it out there so that other people would buy after you and make you rich. It has not rallied at all, which is brilliant. And I hope for the sake of the broader crypto universe and its credibility amongst serious players that these things die. So sorry if you've got it, but that's just a personal opinion on Shiba. I think these meme coins do more damage than good. Switching gears and databases, we are over at the big equity indices now. The NASDAQ long-term trend is holding. We can see it just nudging along that dark green zone there, the long-term dynamic trend zone. We can see how that does support prices. It's neither here nor there, so probably no further comment required on fairly neutral in the short term to long-term bullish bias. Let's have a look at the S&P 500. Far stronger on a relative basis. We have had a couple of reaches and tests of that short-term supply zone, but we've held pretty well with some nice candles moving back towards those highs. I can't get too excited about what I'm seeing here because I think we're maybe moving, remember that Bitcoin chart where we saw demand side equilibrium and then supply side. I think maybe we're moving into a little bit more of an equilibrium market just temporarily. So it's becoming more of a stock pickers market. Doesn't mean stocks won't go up. We saw GameStop, we saw AMC before, but rather than just sort of buying the big basket of indices and benefiting that way, I think you have to drill down and find some stocks. But otherwise, the trends are still pretty solid there. Let's head over to China. Haven't looked at this one for a while. That looks very constructive, and I guess when the Chinese share market is doing well, that's good for the rest of the world also. US dollar index, if you're interested in that, that's still trending down fairly strongly, probably prone to some short-term bounces around here. Having a look at the volatility index for equities traders, we want to see this one as low as possible, and we tend to see the best bits of the bull market, or the best bits of the bull market over the last 20 years have occurred when this has been certainly below 15 but closer to 10. At the moment, we're still trading, and I'll give you a number here. What's this close? 1736, a high teens, but heading in the right direction back towards that April low at 1538. And when you combine that with the pullback in the bond yields, I think together lower volatility, lower bond yields, just supportive of higher equities, but not really evident in that S&P 500 chart or the NASDAQ chart just yet. And that is interesting. That is interesting in itself. So things that have caused issues for equities in the past, potentially some of the intensity of those factors dying down, but yet equities not really taking the baton and running on with it. Let's have a look at the Australian market here. Pretty strong, holding above that short-term trend zone. We had this little pullback here as a lot of risk-on markets saw some damage being done as the crypto market unwound. So I think there was a little bit of sort of cross-asset forced selling there. We've come back fairly well. I would like to see, before I get too excited though, a resumption of higher peaks and higher troughs. That would be encouraging. And until then, I think, similar story to the US. We're in a bit of a stock pickers market. And hey, I've got plenty of stock picks for you coming up. Best sectors, without a doubt, the financial sector is still hands down the clear best sector. Healthcare starting to look interesting. You can see we've moved back into short-term, long-term uptrend, albeit the long-term uptrend is pretty flat at this point in time. But certainly would be looking for some buys in that sector. Materials has taken a hit on the back of those iron ore prices. We saw that earlier. Look, the long-term trend is definitely up, and I'm happy to give this one the benefit of the doubt as a result of that. Other sectors which look interesting, the consumer discretionary sector is up there with the financials as certainly being one of the best sectors on the market. So we're looking at where you might be looking for longs. In terms of avoiding longs, still I think you're avoiding the utility sector. Absolute basket case, clear-cut long-term and short-term downtrends. The energy sector, I can't get excited about that as much as I keep hearing about how cheap the stocks are in that sector. And we saw, energy prices still quite strong. The gold sector is one that looks half interesting. We talked about gold prices. But again, I'm at best lukewarm on the sector in general because of what the gold price is doing. And just looking at the time, we better get to our stock picks. Otherwise, we're not going to get through them within the hour. There are 40 of them. I'm going to whiz through them very quickly, simply talking about what the trends are doing and effectively what your entry point might be. If you see some text down here, that's simply a reminder for myself that we have covered it in Think Technical before and the price that it was covered at. 360 Life is the first one. Fantastic trend. Long-term uptrend, short-term uptrend's intact. I like the fact that we have bounced off this short-term dynamic trend zone with some nice candles. I like to see the white candles coming in there. Happy to buy around current levels if you're not in it. If you are in it, obviously continue to hold. Alpha HPA is also one we've covered a couple of times. If you're in it, certainly hang on to it. If you're not a fantastic day to day, but I guess it's still a live candle. If you're not in it, I'd be happy to continue to buy sort of between this sort of 65 and 60 zone on the back of the very strong trends that are in place. Adairs, one we continue to cover. We just look at this, keep covering this one and still calling it a buy today. Happy to buy around current levels based upon the return to higher peaks, higher troughs. Some very strong candles in there, returning to being predominantly white within what are well-established short-term and long-term trends. Happy to buy at market on that one. Alcidion Group is not one we've covered before. It didn't have such a big candle when I looked at it this morning. Unfortunately, it has had a pop through. Are you too late? Look, I don't think so. And for any of these smaller stocks, and look, anything under sort of 50 cents and certainly under 20 or 10 cents, it's all about small positions here that you're hoping will have a big impact on your portfolio. So if you're taking a small position, getting in a couple of cents after the breakout probably won't matter. If you're a little bit more conservative, you can wait maybe for a pullback to say 42 or 43 cents, which is the breakout level, but otherwise happy to get involved on that one. If you're unsure what the ticker code is, it's just down here on the far right, or you can look up top here as well. ARB, this is one we've covered a couple of times before. Certainly happy to stick with it based upon those prior recommendations. The technicals still look fantastic. It's one of those textbook bottom left, bottom right charts. Print this chart out, stick it on your wall, and when you see that sort of a chart, you run out there and you buy it. Australian Vintage Group, another one we've covered a couple of times. Certainly happy to stick with it. If you're not in it, still happy to get on board on the basis of the candles and the trends. A nice little basing pattern there. This is a very interesting one. Breville, it's one we have covered before. You're probably a little bit behind on this one if you're in it from those past recommendations, and also having seen some nice profits through here evaporate a little bit. There has been a dividend in the meantime. But I do think we are bouncing off this long-term support zone, so I would definitely be happy to hold. If you're not in it and you're looking for, this is a high-quality stock, but with a longer-term sort of point of view, then I am happy to buy it and to continue to buy it, I should say, at these levels. Catapult Group is another one we've covered a number of times before. We're slightly ahead on it. To be fair, it's not bad being slightly ahead on a tech stock, given the tech wreck that we've seen over the last couple of months. I'd stick with it, and if I wasn't in it, I'd certainly be looking to investigate getting into it now on the basis of very strong performance over the last couple of days. The fact it's bounced off this long-term trend zone, and we do have a really nice basing pattern, which potentially we can launch our next big move off. This next one, Cazaly Resources, definitely falls into the category of highly speculative. You can see it's a 5.5 cent stock, so act appropriately and accordingly with the amount of capital you apply to this one. It should be a very small amount. But as a spec buy, I think it looks very interesting. The short-term trend has swung back up. We do have some volume coming in here indicating some supply removal of these key levels. We haven't seen a lot of supply come back into the market after the breakout, which is encouraging, and bouncing off that little supply level. I'm happy to get in around the current price of about 5.5, 5.4 at the moment. Codan, we've covered this one before late last year at 11.48, so that is doing very well. This is, again, like ARB, the classic stairway to heaven, I call it. Print it out, stick it on your wall. These are the charts that you do want to own. Happy to buy it at current levels. If you have it, obviously you would continue to hold onto it, as you would for Collins Foods. You know, today is really just about spotting for you the really nice charts out there, and you may be on them. The benefit in listening to me might be, look, I'm going to hang on to it, or potentially showing you opportunities. I definitely hang on to this one. As far as buying it, it has pushed a long way out of that little breakout zone. Maybe look to buy a pullback if it can come back to maybe about 11.50 to 11.70. Next one is Domino Pizzas, coincidentally, Collins Foods, Domino Pizzas, both in a very similar area of business, that is fast food. This one, I like the fact that it has consolidated well around this sort of 100, 105 level after breaking through that key round number. Pull back today, nice rally off that level, happy to get in around here. And what is just a really wonderful trend. E25, this has had a recent pullback. It's now back into higher peaks and higher troughs and building again. If you're on it from previous discussions, I would certainly hang on to it. If you're not in it, maybe a little pullback into sort of 225, 230 might be a better entry than just chasing here. EMR, which is Emerald Resources, have continued to buy that one. It's around same prices when we ran it last time. I did say I was going to talk about some gold stocks today. I think there's 3 in here. This is the first one, Evolution Mining. If you have to buy gold, if you're a gold bug, I've already given you my opinion on the gold rally at this point in time. But if you are that way inclined, this is the first of the 3 that I think you could do well out of. I like the white candles. I like the return to the short-term uptrend. I like the fact we've burst above that long-term, what is a downtrend zone, but it's gone from acting as long-term resistance to long-term support now. So happy to buy that around current levels if you're after a gold stock. Genworth Mortgage could be a bit more of a slow burn, but I do think it's building towards something interesting here. Happy to buy it around current levels. Galaxy Resources, just really recapping this one. It's definitely still a hold for me. I know it's had a fantastic run since the numerous times we've talked about in the past, but there's certainly enough in that bounce off 329 in terms of the strength of the bounce to continue to give it a go. Imdex, again, one we've covered many times. I'd certainly be comfortable holding it. If you're not in it, I'm happy to buy it here. Janison Education, this is a new entrant to the list. Another stock with a well-established short-term uptrend. The long-term uptrend is well-established now. Some good price action in there. And whilst the candles are a bit sketchy, and I think that's more to do with the lack of liquidity, I can see this one continuing in trend. Happy to buy around current levels. Kathmandu, another new entrant to the list. This is a very interesting little turnaround play. So we've talked about these ARB style charts, bottom left, top right. This one has been an underperformer for a significant period of time. We've seen it being resisted. We've seen the rally being resisted by this long-term dynamic trend zone, previously a downtrend, but that's about to switch to up. Very interesting. Short-term trend is definitely up. The candles have swung back to being predominantly white, and we're getting some higher peaks and higher troughs in. So I think this is a very interesting turnaround play, and it's probably my pick of the turnaround plays actually today. Happy to buy around current levels. Kleos Space, this is a very interesting company. They put satellites into space and spy on the RF spectrum. Happy to buy around current levels. If you're on it, definitely stick with it. Megaport, one of the few tech stocks I have in here at the moment. I did cover it in an Ausbiz spot about a week ago. It's had a little bit of a run since then, so I think you can buy pullbacks because there might be a little bit of supply in around 15, but I do think it has turned the corner. So again, another one of those turnaround plays, a bit like Kathmandu. Monash IVF, we've covered it before. I'd say just sort of stick with this one right now. Pendal, I think is a buy, but it's a bit more of a long-term, slow burn sort of buy. Portfolio, self-managed super style scenario. Peak Resources is probably not a self-managed super fund stock. It's more of a speculative play, but I do like the way it's pulled back to the long-term support zone. It's starting to build into high peaks and high troughs. The candles have turned white, and we've got some pretty nice candles in there as well. Happy to buy around current levels. Propel, another slow burn, no pun intended at all, given what these guys do. It is more of a long-term portfolio pick, but I think it can continue to do well. Stick with it or buy it if you don't have it. And this one is more of a stick with it. I'm not sure if I want to buy it up here. It's had a pretty darn good run, maybe on some pullbacks, but if you did get it from the last recommendation, then hang in there. Perpetual, also doing well from the last time we covered it. Again, more of a longer-term portfolio buy. Happy to get in around here. Perseus Mining, the second of the three gold stocks. Nice basic pattern there, and unlike a lot of those gold stocks which actually moved into long-term downtrends, this one really held quite well. Long-term trend never actually switched to down. It definitely has turned back to up, and I do like the candles coming in at the end, so that's quite interesting. QBE, a bit more of a long-term portfolio buy, more of a turnaround play as well, but certainly looking very prospective here. REA, that's more of your bottom left, top right stairway to heaven. Looks amazing. Hang in there if you've got it. If you don't have it, I think a very solid portfolio buy. Reliance Worldwide, also I think a very solid portfolio buy. Shriro Holdings, probably one you've never heard of, but there is quite a substantial business behind it. Would happy to be buying that around current levels based upon trend and candles. Super Retail Group looks like it's building to a really interesting point here at $12.89, and great underlying business as well. Definitely happy to back that in a longer term portfolio. As I would Suncorp, a bit more of a turnaround play, but again within that very strong financial services sector. This and QB are looking very interesting. I do have Westpac. Let's head to Westpac now before we do the other ones. Just simply whilst we're talking about the financial services sector, I could have put all four of the big banks in. They all look very similar. I just picked Westpac just for the sake of providing an example, but definitely would stick with them if you are a longer term yield focused investor. I'm happy to buy them here as well. I think we were at TWE before we skipped. An interesting turnaround play. Maybe it needs a little bit more cooking here, but one I'm definitely keeping on the watch list. This is the third of our three gold stocks. Another example of a gold stock that didn't move into a long-term downtrend. I think that's very important. Wonderful candles, great price action towards the end, and it's probably my pick of the three gold stocks today. And then Wagner's Holding is the last one. More of a portfolio buy, probably a bit of a slow burn, but certainly with that great basing pattern breakout. Yes, we do pull back sometimes after the basing pattern, but holding the trends and the long-term trend looks very good as well. So they are the 40 stock picks for today, in addition to all that crypto coverage, indices, commodities. Not a lot I didn't do there, but hey, the market will be open tomorrow and there'll be more updates in the market news section of the website, so make sure you keep tabs on that one. You can follow me, all the Think Market handles, if you'd like, on Twitter. In terms of upcoming events, I would definitely, if you'd like this presentation, I would definitely point you to the one in the middle, which is Ask the Experts. So you've had to listen to me rabbit on for the last half an hour or so. Go to the webinars page, register for Ask the Experts, and you're in control of the conversation. You get to ask about the stocks in your portfolio. Apart from that, also register for some of these other educational webinars we have. Well, that's it for me today. Thanks for joining me. The most important thing I'm going to say in this entire presentation is that the trading ideas I've discussed today are based upon my analysis and my experience in the markets. Hey, you still need to do your own research and come up with your own ideas on how you're going to manage your capital. We are a regulated Australian broker. We do have some products that could see you lose more than your deposits. So please, please, please read this disclaimer carefully, or if you have any questions at all, give us a call. Thanks for joining me today. Hopefully you got lots out of it. All the best for your trading. Until we catch up again. Bye-bye for now.